What is up, everybody? Happy Wednesday, and welcome back to the Everything Crypto YouTube channel, where we keep you up to speed on the most important news moving the crypto markets. Now, in today's daily market update, we have a jam-packed video for you guys. We got to talk about Bitcoin, first of all, trading at $37,000 in Nigeria, and we're going to break down exactly why it is trading at over a 65% premium in this region. Then we got to talk about Quant and their partnership with the LAC chain. This is the blockchain of Latin America, who is going to be launching their Latin American digital dollar this upcoming year, and we're going to break down exactly why, if this launch does happen this year, why I think it will bring trillions of dollars into the Quant ecosystem. And then last but not least, we have to talk about a new Cronos program that is looking to attract a ton of talent to this blockchain, and why I believe this could help Cronos make that push to once again sit in the top 10 in terms of TVL. And why I believe this program could in fact help Cronos move its way back up the leaderboards in terms of that total value locked across all different chains. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, before we hop into the content, I just wanted to ask that if you have not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto squad. And with that, we're going to hop right in here with the question of the day. And today's question is, do you think the Fed is going to raise interest rates by 25 basis points or 50 basis points? Let me know in the YouTube comments down below. Obviously, the Fed meeting is going live in a couple of hours. And as we can see here, based on the CME futures predictions, 99.3% of people are pricing in a 25 basis point hike. So I think that right now this is what is priced into the markets. I think if we actually get this 25 basis point hike, that we're not going to see too much movement in the market. But I think if we were to get a surprise 50 basis point hike, that this would send the market moving to the downside very, very fast. So that's why we're not going to spend too much time here with what is happening right now on the price action, simply because this could all change in a couple of hours. Instead, what I'm going to do is lay out two different scenarios for you guys and let you know what I am looking for to the upside and the downside. And so first of all, we're going to talk about what I'm looking for to the downside, and that would just be a very healthy retest of that $20,000 level. I think that Bitcoin coming back to validate this area as a level of support would be very good for market sentiment and be a lot healthier for it in terms of more of a sustained uptrend. And the reason being here is two different things. For starters, 20,000 is a key level as it was the 2018 all-time high. This is the first bear market in history where Bitcoin actually broke below a previous bull run all-time high, and that was definitely not very good for the overall market sentiment. So I think that if Bitcoin could once again retest 20K and validate that as a level of support, that would do a lot for the overall market sentiment here. Not to mention the fact that this is also where the top of the bull market support band sits. So the 2018 all-time high as well as the top of the bull market support band, which is a very good indicator for kind of showing us when Bitcoin is in bullish or in bearish states. When we are above the bull market support band, it is bullish, and when we are below this bull market support band, it effectively flips into the bear market resistance band. And you guys can see that the upper channel here of the band right now is sitting at 20.2K. So I think that a retest of 20K to the downside would be very likely for Bitcoin if it does make its way back down there. And then to the upside, the big thing that I'm looking for would just be a test of 24.7K, and that is where the 200-week moving average sits. You guys can see here on the 200-week MA heat map that this has acted as a very strong level of support for Bitcoin in the past, as well as a magnet for the price action over long periods of time. And just like that $20,000 level, I mean, this was also the first bear market that Bitcoin actually broke below the 200-week moving average and has spent a sustained period of time below it. So to the upside and the downside, those are the two clear levels, in my opinion, that will show as some sort of support or resistance for Bitcoin. Then as for Ethereum here, I mean, Ether right now is currently sitting at just over $1,600. Actually, I lied. It's currently sitting at $1,581. So Ether, I think if Bitcoin is going to move down to 20K, then it is pretty likely to make a retest of $1,400. Once again, that is Ethereum's 2018 all-time high. The 200-week moving average sits at $1,394, and the bull market support band is in between $1,347 and $1,446. So $1,400 pretty much dead smack in the middle of the bull market market support band where the 200-week MA is lined up at the moment. So a lot of indicators showing me that Ether does want to come back down to 1400. Now, if the crypto market does surprise us, which it definitely can, and make a move back to the upside, I think the next key level to look for here would in fact be 1780, which is where the 50-week moving average sits. And you can see here that the last time we tested the 50-week was actually back in March of last year. We had a little fake out break above it all the way up to about 3,500, and then boom, Ether broke below it and has not retested it since. So that is what I'm looking for to the upside and downside on both Bitcoin and Ethereum. And obviously, this is very greatly going to depend on what does happen today with the Fed meeting minutes, as crypto has been a lot more tied to the economy as it has been previously, just because of the current state of the economy and the slowdown that we are experiencing. A lot of the money that was printed in 2020 and 2021 is now getting squeezed back out of people's pockets. And obviously, we are dealing with a lot of the devaluation of our dollar over here in North America. Now, speaking of the devaluation of dollars, we're going to start off the Bitcoin news talking about Lebanon, who has set a new exchange rate, dramatically devaluing their pound. So 3 years into a crippling financial crisis, Lebanon's central bank on Wednesday set a new exchange rate that effectively devalued the country's currency by 90%, but did little to bridge the gap with the soaring black market rate. So the dramatic measure is meant to stabilize the free-falling Lebanese pound and eliminate the multiple exchange rates that currently exist. A key demand for the International Monetary Fund for a bailout package for Lebanon. The new rate set Wednesday is 15,000 pounds to the dollar. And that is in fact a 90% reduction compared to what was just 1,500 pounds to the dollar. So crazy things happening here in Lebanon. The government just straight devaluing their pound by 90% overnight. Obviously, citizens of Lebanon are not super happy with this, as they are waking up today and their dollars are now worth 90% less than they were yesterday. Once again, I mean, the government's just imposing rules like this and changing monetary policy like that shows you the value of something like Bitcoin, which cannot be impacted, cannot be manipulated by these governments. It is on a set schedule in terms of its supply release to maintain its value over time. And I think that more and more people are going to see the value of this alternative currency and asset class as governments do continue to impose crackdowns like this. And speaking of government crackdowns on their currency, we do need to talk about Bitcoin also trading at massive markups in Nigeria amid a run on ATMs. So the price of one Bitcoin in Nigeria is upwards of $37,000. You guys may have seen this, and I'm going to break down exactly why. This is in fact on the leading exchange NairaX. And furthermore, the price on peer-to-peer markets is even higher according to some reports from Paxful users. Nevertheless, it is not the first time there has been a massive Bitcoin premium in the West African country. In February of 2021, the Central Bank of Nigeria banned regulated financial institutions from providing services to local cryptocurrency exchanges. And as a result, the demand for Bitcoin surged, pushing the premium to as high as 35%. Now we actually see that the premium here is as high as 65%, as there is in fact a bank run, or not a bank run, more of like an ATM run here, as there were restrictions placed on withdrawals by the central bank. So Nigerians were only permitted to withdraw a maximum of 20,000 nairas, which is around $43.44 from cash machines per day as of January 9th. So the Nigerian central bank is only allowing Nigerian citizens to withdraw $44 a day from their bank account. There were also limits placed on over-the-counter cash withdrawals and weekly limits on the maximum allowed. Furthermore, the new rules were imposed by the central bank as it launched new banknotes. The central bank aims to curb money laundering and keep inflation under control, but it has driven people to Bitcoin instead, a much more logical solution in my opinion. Why do they think that Nigerian citizens will continue to trust them when they are only allowing them to take out $44 a day in cash? And this does come at a time that Nigeria is looking to push their central bank digital currency and a cashless society. Go figure. So they're looking to eradicate cash and go fully digital. Its eNaira CBDC, launched in October of 2021, has failed to gain traction among Nigerians who prefer cash and crypto. And you can see that after a year of it being launched, just 1 in 200 Nigerians were using the e-Naira. Nigeria also plans to regulate cryptocurrencies as its central bank has failed to contain a blockade it imposed in early 2021. So they are looking to crack down on crypto. They are looking to promote the use of their digital dollar, the e-Naira. And another way they are now trying to do this is by imposing cash limit withdrawals of under $50 a day on their citizens. Once again, it shows you guys why we need to move away from these currencies and move to true decentralized ones like Bitcoin, okay? I mean, regardless of what you guys think about central bank digital currencies, we know they are coming, and I don't agree with them, but I can't really do anything to stop it. They are going to happen globally, in my opinion, over the next couple of years. So the next thing that we look towards is how can we make money off of the upcoming CBDC push, and that is where Quant comes into play. So we're going to talk about all that in just a second, but first I do want to quickly mention 2 more things when it comes to Bitcoin and Ethereum in terms of the on-chain data. And when it comes to Bitcoin, the total hash rate here is once again hitting a new all-time high. So the mining industry just remains relentless in this bear market. Even in the face of declining prices of Bitcoin, more and more miners are fighting for their piece of the network. And then in terms of Ethereum here, the one thing I do want to show you guys is that in the past 139 days, there has been a supply change of 5,300 ETH being burned. So a negative issuance, effectively meaning that ETH is deflationary. Now, if we go ahead and take a look at this on some shorter time frames, in the past day, 801 Ether has been burned. In the past 7 days, 2,000 Ethereum has been burned. And in the past 30 days, 10.5K Ethereum has been burned. With a current supply of 120.5 million, that is not a small amount of Ether to be burned whatsoever, especially considering that we are in the middle of a bear market. When we are back in a bull run with sustained on-chain activity, more buying pressure, more FOMO, I think that ETH is going to flip deflationary at a much more rapid pace, really showing people the scarcity of this asset class following the merge. Now, getting back onto the theme of digital dollars, we are next going to talk about Quant and the LAC chain, as they are set to launch the Latin American dollar in 2023. The value of transactions per year in Latin America is around 20 trillion USD. Effectively, we are hypothesizing here that the Overledger will facilitate trillions of transactions in Latin America. The Quant Overledger obviously being the piece of technology that we do cover quite frequently on the channel. This is the technology that does allow for interoperability between blockchains in terms of applications, in terms of central bank digital currencies, in terms of the tokenization of physical assets. I mean, there is a lot that this technology can do. And I do think that it is going to be a very important piece of infrastructure leading into sort of like the digitization of the current monetary system. So Quant's partnership with LAC chain we have covered here on the channel before. And for starters, it's worth talking about what exactly is the LAC chain. This is a global alliance integrated by different actors in the blockchain environment and led by the IDB lab for the development of the blockchain ecosystem in Latin America and the Caribbean. So they're effectively looking to use the LAC chain to accelerate the enablement of the adoption of blockchain technology in the region. And this is going to be very big here, as this is going to spread all across Latin America, and Quant is in fact partnered up with them directly. So it says here that the partnership between LAC chain and Quant uses the Overledger for established banking partners to benefit from interoperable infrastructure for fast, easy cross-border payments and implementing different use cases throughout the region by using tokenized currency. So we can see here a direct correlation between the Quant Overledger and the LAC chain. And it says here in more detail that the LAC chain and the partnership with Quant is going to allow for interoperability for the LAC chain to other distributive ledger technologies, provide Overledger's gateway capability for LAC chain participants to integrate with resources and DLNs across the Overledger network, enabling multi-DLT payments and other capabilities through Quant's patent-pending multi-DLT token technology. So the ultimate goal of the LAC chain once again is to bring the blockchain all across Latin America and the Caribbean. However, although there are many individual DLT networks currently in use, these networks do not meet the requirements such as scalability, governance, and transparency for many different use cases. And the partnership between LAC chain and Quant does aim to fix this, as the Quant Overledger does address a lot of these limitations to deliver an infrastructure of free, interoperable, and regulated blockchain networks. So we can see here that Quant is not a decentralized project. They do do not claim to be a decentralized project. In fact, they are looking to centralize the crypto space. And obviously, while, you can say, oh, we want decentralization, and I could say that as well. Obviously, the decentralization of finance, I think, would be better. At the same time, the only place you're really going to get that is in the form of Bitcoin. You have to understand that any of these other projects with CEOs who are looking to do, investment seed funding rounds, who are doing ICOs and selling their token to raise money, they are incredibly centralized, okay? And Quant does not pretend to be decentralized. In fact, they say we are incredibly centralized, and they are looking to mainstream crypto, and that's okay. That has been a big investment thesis for us when it does come to Quant, as decentralization of crypto, the launch of CBDCs on the Quant Overledger should mean some big price appreciation for the Quant token in the future. And I want to also talk about the relationship between the Quant Overledger and the actual Quant native token itself, as I have seen a lot of these tokens that get launched and a lot of these projects that have good use cases, but it doesn't exactly directly correlate with the price increase of their token. So here's what we know. We know that as of 2019, about $13.95 trillion USD settled across Latin America in terms of payment transactions. And we know that if Quant was to help the LAC chain launch the Latin American digital dollar, a lot of this money would be flowing through the Quant Overledger itself. Now, here is where the Quant token does come into play. As for starters, Quant tokens must be provided to Quant Network in exchange for an annual license. Price of the access will be fixed in fiat, and the number of tokens needed will vary depending on the price of Quant. So enterprise license fees are being paid in Quant to the Quant team, and effectively meaning that any entities that want to use the Quant Overledger need to hold Quant to pay these fees on a yearly basis to continue using the Quant Overledger. This also goes for the developer license. Platform fees are calculated as a percentage of the license in Quant and will be payable by all users and developers. A minimum Quant holding amount is put in place for every participant of the Overledger ecosystem, and the wallet storing Quant is your identity, the private key is your password, and with the license fee you are assigned a BPI key. Now, a big one here is transaction processing. So Quant tokens are used to validate, sign, and encrypt every transaction that flows through the Overledger. Every enterprise client, developer, user, and application validates each transaction using their Quant linked to their ID and account. No transaction can flow through Overledger without being securely validated by these Quant tokens, okay? So effectively, you guys can see that there is a direct correlation between the use case of the Quant Overledger as well as the Quant utility token itself. Effectively being that if you want to use the Overledger, you need the Quant token to pay your enterprise license, your developer license, your platform fees, verify your identity, as well as your transaction processing. And last but not least, users will need to hold Quant tokens to be able to run these multi-chain applications. The license key will expire annually and must be renewed with more Quant tokens. I don't know anybody that is going to start building a multi-chain application on the Quant Overledger and then simply scrap that whole idea because they do not want to pay their licensing fees in Quant. So once again, showing you guys that there is this direct correlation between the use case of the Overledger and the Quant token itself, given the fact that I think the Quant Overledger is going to be incredibly important in the future in terms of distributed ledger technology, and the scarcity of the Quant token sitting at a 14.6 mil total supply. I think you guys can see why I am so bullish on this altcoin. I do also want to give you guys a quick update here on the Quant chart before we hop into the Cronos news, and the reason being is I do think that Quant is due for a little bit of a pullback in the short term. I think that it is going to make its way back down to that 130 level at the moment, which does in fact sit near the top band here of the bull market support band. We can also see here that if I put the lines back on the chart, that 130 has played as a key level of support and resistance in the past, and after failing to have a successful continuation of that move above 150, 130 is the next level that I am eyeing. If we do see a continuation of this move to the downside, Bitcoin moving down to 20k, Ethereum moving down to 1.4k, I do think that Quant could make its way back to the $110 to $100 level, where I personally would be treating this as a buying opportunity, not financial advice, just my personal opinion. You guys know that we were talking about loading the boat on Quant here in May, June, July in this double-digit range, but I think that given Quant's very impressive rally throughout the bear market, that a lot of attention has been put on Quant, and that's why since it broke above $100, a lot of people do not want to see it go back below below this level. Now, also worth noting here, the Quant in terms of its valuation versus Bitcoin has also been on an absolute tear. So this is not Quant versus the US dollar, this is Quant versus Bitcoin. And you can see here that Quant has been a very solid outperformer of Bitcoin pretty much since 2020. But the real takeoff began here in 2021, and Quant throughout a bear market has outperformed the king of crypto. That is very rare for altcoins in a bear market, as usually Bitcoin does outperform the majority of altcoins. And also worth noting here that since May of last year, Quant has also been outperforming Ethereum, so outperforming the two biggest coins in the market. And obviously, if Quant does continue this outperformance, I do think that it will make its way into the top 10 cryptos by market cap eventually. If Quant does execute on all of the utility that it has, and I really think that this is going to be where Quant does land itself, as it is one of the most unique tokens I have kind of seen in terms of the utility as well as the tokenomics that really do benefit the people who hold this token. We're not talking about a token with a billion, with 50 billion, with 100 billion total supply. We are talking about a token with 14.6 million, 33% less than Bitcoin, effectively meaning that as Quant's market cap goes up, all of the Quant that you personally own is going to be more valuable, as there is not a lot to go around for the general public. Now, we're going to wrap this up here talking about the Cronos chain, as their accelerator program is officially open. They say apply now for our 3-month program advancing Web3 dApps on the Cronos chain. They have 12 weeks of workshops and mentorship and $100 million in the war chest. So what this is going to offer these projects is 3-month remote accelerator, legal, tech, tokenomics, commercial, marketing, and fundraising, access to leading crypto and VC mentor and investor network, an immediate $30K as well as up to $300K follow-on investment from Cronos Labs' $100 million ecosystem fund. What this looks to do is create opportunities to form strategic partnerships with companies in the Cronos network, one-to-one tailored sessions with their technical specialists to support design, building, and scaling, deep dives with Cronos degens, and focused fundraising support. I don't like when professional companies put degens in their posts, but that's just me personally. 4, we are looking for teams building across the stack, including DeFi, GameFi, SocialFi, and infrastructure, with applications closing on the 24th of March of this year. So we're not actually going to see the benefits of the accelerator program here happen for at least another month and a half, 2 months at this point. But I do think that over 2023, this could potentially lead to some talent making their way onto the Cronos chain. You can see here that in the past, they have partnered up with some pretty big names for their accelerator partners, including Crypto.com themselves. We have Ubisoft. I mean, you can see Huobi Ventures as well as past cohort mentors on the team. So the thing here, and the biggest thing when it comes to the Cronos chain that we have kind of been looking at over the past couple of weeks, is the fact that if we take a look at Cronos' ranking here amongst other blockchain in terms of TVL, Cronos is currently sitting in 10th place and does look to be at threat of falling out of the top 10. We can see that Solana has about a $497 million TVL, with Cronos having $409 million, and then Mixin here in 11th place with $358 million. So Cronos only maintaining this lead by about $50 million at the moment, and this is crypto. That can change pretty much overnight, especially given that the blockchain here in 11th place, Mixin, has seen a 1-month change of 34% in TVL compared to Cronos only having an increase of 5.97%. And that's still an impressive increase here in a month, right? Like 5.97%. But take a look at the 1-month change on all these other blockchains, and they've been smoking Cronos as of late. I mean, Ethereum has had a 1-month increase of 30%, Binance Smart Chain 19%, Tron 26%, Avalanche 19%. You guys can see here that in the top 10, Cronos has had the slowest 1-month change in terms of that total value locked. So I do think the Cronos team is aware of this and making a push to keep Cronos in the top 10, as once again, I think that being in the top 10 blockchains in terms of TVL is very good in terms of advertising and sentiment towards the chain in general. So hoping that this program can attract some talent over to this chain. And I do hope that 2023 is a very big year for Cronos in terms of building, as this could also bring a lot of attention to CROcoin itself, the native token of this blockchain. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Wednesday, and I hope to catch you in the next one. Peace out for now.